to another Swiss Weekly Wrap. I'm Viv Govender, and as usual, what we'll do is we'll go over some stories of the week that affect you and your investments going forward. Okay, stories this week are going to be as follows. Firstly, we're going to discuss Marcus Jooste's suicide and the state of the South African stock market. Then we'll discuss the latest moves from the Fed and what they're likely to be doing this year. And then finally, we're going to end up with a little beat on Reddit and a broader discussion on data in the new AI ecosystems that are being created. Okay, starting off with Marcus Jooste's suicide. Of course, suicide is a very serious topic, but an interesting thing to point out here, it's been multiple years since it's been pretty clear that something very seriously wrong happened at Steinhoff. And, the evidence that Marcus Jooste was involved in that, I think, was also pretty clear. The fact that it took so many years for there to be a serious move to arrest Marcus Jooste is, I think, a failure of the system. As the Americans often say, justice delayed is justice denied. In this case, apparently the reason that he committed suicide when he did was he was about to be arrested. But like I said, it was multiple years after the actual events of Steinhoff. Now, the reason that I bring this up is that the JSE over the last little while has been under pressure in terms of things like listings, in terms of performance, etc., etc. But I think one of the key issues that we have not discussed enough is the fact that some of the trustworthiness of the companies listed there has come into question. There's been a number of scandals, not just Steinhoff, but Tonga Juliet, etc., and a number of interesting, let us say, moves by significant owners or directors of some publicly listed companies that's called into question, whether or not minority shareholders, which is the majority of retail shareholders, are fully protected as they should be, and that has, I think, been found to be lacking. Now, obviously, it's not the JSE's fault that the Hawks, which was the police, basically have not prosecuted people as effectively as they should, but it does indicate an overall weaker ecosystem that the JSE is operating in, that kind of discourages retail investors from investing in it. And maybe one of the reasons that we are not seeing the level of growth as well as the level of new listings, etc., on the exchange as we had in the past. In order to have an exchange be functional, we need to be seeing that the money that you invest there is going to be treated in a way that you think is fair. And like I said, there's a number of cases recently, I won't go into detail, but that has called that into question. Okay, next, the US Fed. The US Fed has come out and indicated they still expect to do 3 rate cuts this year. Now, the last couple numbers we've gotten from the in terms of inflation, in terms of growth, in terms of the economy, indicates the following. It does appear that the US economy is stronger than had been anticipated, and does appear that the US economy also has a higher level of inflation than had been hoped for. In fact, the last couple of numbers we've got in terms of inflation have surprised on the upside. Now, why is this important? Well, understand what rates are meant to do by the US Fed. It's meant to fight inflation, and it's meant to fight inflation by lowering economic growth. And the reason that you'd be cutting interest rates is when you want to basically boost economic growth, because it's maybe falling too fast and inflation is no longer a problem. That's not the case in the US. Inflation is still a problem. Inflation has, in fact, in some of the last recent numbers, increased. But we've also seen, basically, economic growth is not under threat. We are not seeing an economic number from the US recently that's saying, oh, it's so weak that we need to do something to save this economy. So, why would the Fed be cutting interest rates? Well, part of it is political pressure, I think. Part of it is market perception. The market believes that the US Fed has had rates up too high for too long and has been kind of built in expectations of a rate cut. This is an election year for the US. We have the US presidential election, but also a number of other elections at the same time, Senate and so on. And the idea is that that's generally not a positive for those it's good for the party in power to have interest rates as high as they are. So, in terms of what the US is doing at the moment, we are looking at a situation where the Fed may be acting in a way that may not be justified by the data that's out there right now. the Fed may be looking to cut interest rates in an environment where inflation is not just at the target level, not only is it above, maybe it's, you could say it's not at the target level, maybe it's above the target level and falling fast enough that you think it's going to hit the target level and it's like the right time to cut in interest rates. Not that. It's not falling that fast. In fact, the last number said it was slightly increasing the inflation rate. So it's not at the target level and the trend is not strong enough to the target level that you think, no, this is a guarantee going to happen. And then one of the reasons you'd be basically looking to cut interest rates as well is the fact that the economy may be so weak that you think, oh, we need to save it, but the economy is not that weak. So like I said, a lot of the stuff that the Fed would use to justify a rate cut at the moment does not seem to be there. But rates are at historically high levels, and like I said, pressure from both politics and from the market may be pushing the Fed to act in a way that might not be entirely justified. It remains to be seen. Many people got it wrong with regards to the Fed and their ability to manage the US economy. They've managed it over the last couple of years in a way that is much, much better than most people anticipated in terms of outcomes. I mean, the US has not gone into a recession. They've managed to cut inflation not significantly, though not at the target, but still way lower than it was a couple of years ago. Those factors seem to indicate a level of competence in the Fed that maybe people are not giving them full credit for. But I would just say that the data at the moment does not quite justify what they are going to be trying to do this year. And next we're going to discuss in our AI segment / tech segment, Reddit's listing. Reddit just listed, nice little bump up at the start. And the question then arises, what is the valuation for it and where does it come from? Now traditionally these companies like Reddit, Facebook, Twitter, etc., their value was built by their advertising revenue. You basically have something that's interesting that people are going to see. You put some ads in there, you get paid for the ads. That's how you make your money. There are some subscription models like Twitter's had that, or X, you call it, has put a little bit of money in there, so you can subscribe and basically have a blue tick for subscriptions. That's one way of making some money. But generally, this whole field has been funded by advertising. Now, with the invention of AI, or at least the rise of AI over the last couple of years, this has kind of changed to a certain extent. Why? Because Reddit, Twitter, Facebook, YouTube are not just interesting things to go and look at. They've also collected a lot of interesting data. Now, that data is the input you'd put into AI systems. Remember, AI, how it works is a lot of data, put it through a computer system, gives you the output. Computer systems, it's NVIDIA, it's AMD, it's ARM, these companies, they make the chips, they run really well. The data, where does it come from? It's going to come from YouTube, it's going to come from Reddit, it's going to come from Quora, it's going to come from Twitter / X, Facebook. Those guys have the data. And so what you have now is a situation in which you have entities that are valued in one way based on one revenue stream, and now you find out there's another revenue stream. It's like you're a cattle farmer and you've been selling meat all this time, and then you realize, hey, I can also sell leather, and that adds another revenue stream for the same production. Here Reddit was producing same content effectively that was having one purpose, which was attracting eyeballs, but now there's another purpose for that content, which is actually training these AI models. And that, I think, is something interesting to look at. The fact that we are now seeing a separate revenue stream. And we have seen some monetization of this. Apparently, Google has done a deal with Reddit for some of its data. And I think that is something that we need to see develop further. It has been a really interesting development of AI over the last little while, that one of the key inputs has not, to a certain extent, been actually priced in. If you watch a recent interview with the CTO of OpenAI, she basically comes out and is very, very reticent to talk about what the actual data inputs are for training the program Sora. Why? Because it probably opens them up to liabilities in terms of, do they pay for it or not? You see? And in fact, one of the key reasons that we've always been quite positive on Google is that they have some of the best data out there. They have YouTube especially, which is a huge amount of data. There's some questions about whether or not Google can actually use it, because apparently it's something in their terms of service indicates that they can't. In fact, it may make them in a worse position than a non-Google AI company that might be more free to use Google's data than Google is. It remains to be seen how this works out, but that's an important issue, with regards to AI going forward. How do you value the data? But like I said, if we do see that, for instance, Reddit and some of the other providers out there of content are able to really monetize this data, it will really significantly change some of the valuations. It's going to be more difficult for a Facebook or for an Instagram, etc., to get the valuation changed because they're such large companies already. But it's very possible that you could be seeing Twitter, for instance, being worth a lot more than it is, because Twitter may not have the advertising, kick of Facebook, but in some ways it has better data than Facebook does, because there's more interesting stuff happening on Twitter. It could really put a valuation on YouTube that's a bit, higher, because YouTube especially has a lot of data, because video is very, very, heavy in terms of data, much more than words are, and that could be a huge source of income for YouTube going forward, if they're able to monetize that. So yeah, it's an interesting thing. Oh, and one last thing before I go, thing to be mentioned is that Apple has been sued by the US government for monopoly. They're bringing up points like the fact that it's, green bubbles where the words are in, but not just that, it's the app stores, the whole bunch of stuff around the iPhone, the ecosystem effectively that Apple has built over the last, decade plus for the iPhone. That has been basically put on trial right now. And the important thing to factor into here is that we talk about, building a platform, building an ecosystem, etc., and how that creates value and so on. Understand that another way of looking at it is creating a monopoly. Building an ecosystem, in part, means creating a monopoly for something. The Apple ecosystem, because of the ability to exclude people from supplying things that Apple basically is able to supply, that is a monopoly. That is something that when you have, in the US, like more than half of the revenue coming in from a particular sector, that is going to be facing antitrust legislation. So this is an important development, not just for for Apple, but it may affect Google. It may down the line affect companies like Facebook as well, because if you have a monopoly or large enough ecosystem, let me say, that may be something that really is going to impact your valuations if you are sued, and then you have that monopoly / ecosystem removed from your control. Okay, that's it for this week. Thanks for joining me, and I look forward to speaking to you guys again next week. Cheers.